So hello to all. Today in this video, we are going to talk about income statement, or which is also known as trading and profit and loss account, or in a simple word, profit and loss account. So we have already done the T format of the same. The most popular format is this, which is on your screen. That is your vertical format of it. That is known as income statement, more importantly, or we can say profit and loss account also. So now what we can see, if you can see over here, this is a vertical format which is given over here, and we are going to start it with sales. The very first thing, we are going to write down sales, which is also known as revenue or revenue from sales. So sales, then minus cost of goods sold, that is also known as COGS, and the formula to calculate it is opening stock plus purchase plus direct expense minus closing stock. If COGS is not given, then we can just calculate with these information, that is opening stock plus net purchase. What is net purchase? Purchase minus purchase return plus direct expense and minus closing stock. So when we are going to deduct sales, minus when we are going to deduct COGS from sales, we will get gross profit, which is also known as earning before depreciation, interest and tax, which is known as EBDIT. So this is the case with your gross profit calculation, that sales minus COGS. If you will do, you will get gross profit. Then the second thing is going to come, that is you have to deduct these three very important things, or which we can say operating expense. EBDIT may say you have to deduct operating expense, which are depreciation, general and administrative expenses, and selling expenses. So you will get operating profit or operating loss, which is also known as earning before interest and tax, which is also known as EBIT. EBIT may say then you have to deduct interest, and interest, after deducting interest, you will get earning before tax, which is also known as profit before tax. After that is it is given you have to deduct tax, then you will get net income, or which is also known as net profit or earnings after tax or profit after tax or bottom line. And after all this, this is the end of profit and loss account. But if dividend is given in the sum, in the statement, you will deduct that also, you will get retained earnings. So this is exactly the format of income statement. Next, I will take an example and make you more clear with the same. As you can see, sales, for example, as I said, what we have to take, sales minus COGS, will get EBDIT. Then we have to less all the operating expense, we'll get EBIT. Then we have to deduct interest, we will get EBT. Then we have to deduct tax, we will get net income. Then if dividend is given, we will deduct that, we'll get retained earnings. Clear? So we can just go with it. For example, sales are 12,600. COGS, if given, you can just deduct it out. If not given, we can just calculate it out. But in this, I'm just taking zero COGS. Then we'll get EBDIT exactly 12,600. Then I'm just deducting depreciation, telephone expense, salary of 1,300, electricity expense 150, office rent 1,500, insurance expense 60. Total operating expenses are of 3,360. Then if we'll deduct, we'll get EBIT or operating profit, which is of 9,240. Then we can deduct interest if it is given, and we'll get EBT. There is no interest, then we'll get EBT. Then we'll deduct tax and we'll get net income. There is no tax, we'll get again the same net income. Then if dividend is given, we can just deduct that. As it is, I'm just charging 2200 dividend they're going to pay. The returned earning is going to be 7040. So this is a kind of format. With this, we just calculated our return earning, and in case of this, net income is 9240. So this is the structure, vertical structure of profit and loss account. So thank you to you all.